Ernie, looking at this month's report, it decreased slightly and it looks like it's indicating slow growth in the months ahead.
Slow growth for the nine-state region that we survey, of course, the stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south. The leading economic indicator for the month of February is much like what we've been seeing. Sluggish, slow to no growth in the months ahead. Of course, we asked this month about sequestration, which of course is slated to go into effect March 1, and that's what 35% of the supply managers said they expected the sequestration to have a negative impact on their sales or new orders, and of course that's going to push things down even more. So this is an economy that's limping along at best. We've got, of course, higher fuel prices. We've got the increase in Social Security taxes that went into effect on January 1. So all this is pulling the regional economy down over all that, and that's certainly pushing the national economy down.
And looking at employment, even though it's above growth neutral, it's barely above growth neutral.
Absolutely, and what we're looking at is unemployment rates are coming down, but some of that, a lot of it is because workers are getting discouraged and leaving the labor force. So the unemployment rate in all the states is looking better, but that, again, not for the right reasons. We're not seeing a real big expansion in employment from the government numbers, and if you look at our numbers, which are, of course, much more timely, coming out for the month of February now. We won't get the February numbers for the U.S. economy until almost the end of March. But that said, the economy's not adding jobs at any sort of pace that we'd like to see. We're now seeing, at least some of the companies are reporting that healthcare reform, they're already putting some workers, hiring part-time instead of full-time, because part-time workers will not qualify or are not mandated to receive health insurance from their employers. So we're seeing some of that manipulation, I would call it, of employers to make sure they're not going to get hit by health care reform, the mandates which hit on January 1st of 2014.
Employers are building up their inventories in some respect, and that is good, but it may not last.
That's right. The inventory numbers were up for the month, and we asked them about sustainable purchases, procurement, and that's up fairly dramatically over the last 2 years. So that's good for the economy, and it's good for the environment. Now, unfortunately, some of the positive impacts are going to wane in the months ahead if we don't see some real kickers here. And where would the kicker come from? It would, a positive kicker, that is, would be from exports, and we're not seeing that right now. In fact, we saw the opposite, exports down below growth neutral, and that's very troubling. Of course, that can be explained by what's not going on in Europe, some of the risk factors. Italy, for example, that's being spilling over into the overall economy. And of course, to quote Senator Alan Simpson from Wyoming, and why is the stock market going up like it is? And everybody's wondering, well, it's the healthiest horse in the glue factory. Everything is just not very strong out there. So a lot of investors are pouring into the U.S. stock market, even though, in my judgment, the risks are increasing and mounting. Certainly, according to our survey, it's just not where the economy is just not expanding, and that's going to have some negative impacts on the stock market going forward. But right now, it's very positive.
And with everything we're looking at in this report, it's not surprising that confidence is struggling.
That's right. The confidence index, I'm surprised the number was ever so slightly above growth neutral, but down from last month. You've got all these factors: sequestration, the Social Security tax increase, higher fuel costs, and global uncertainty. Put all that together, and confidence is still pretty good, but that's probably a lot to do with the housing sector, which is now finally coming back, finally showing some growth. Probably 5 months now, 4 to 5 months in a row, we've seen an expanding housing market. That's affecting some of the economies that, some of the states that we survey, the economies in those states. And you know, Cindy, one thing that's important here is agriculture, of course, is very, very important for this part of the country. That's still looking very good. For example, the numbers in Iowa are very strong, and that's companies tied to agriculture. doing very well even as the economy struggles. Agriculture is not. Now, agriculture and energy, that would be, of course, ethanol in this part of the country. A lot of it, except North Dakota, where you're seeing some really good numbers in terms of energy and agriculture. So that's very positive, very good for the economy. And but now on the flip side, those organizations that are tied to the livestock producer, livestock's not as strong, but it's more crops and those tied to crops. For example, a Monsanto, other producers that are tied to agriculture doing pretty well. In summary, it's just sluggish growth ahead. There is the I won't say not a certain possibility, but there is the possibility of getting negative numbers in the months ahead, because GDP growth for the final quarter of the U.S. was 0.1%. That's nothing, 0.1%, and that's annualized. We should be growing at 3 to 4 to 5% right now. We're not, and the job numbers that will be accompanying that in the months ahead, at least according to our survey, it's going to be slow to no growth in jobs. Certainly some sectors will be adding jobs, and that would be primarily those tied to agriculture right now. Those businesses tied to agriculture doing pretty well. Some export sectors, now that would be few of them. Overall export numbers not good, but some sectors of the export economy would be, those tied to exports will do better.